Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the daily time frame with the higher probability bullish scenario, where we are still looking for a move towards the upside in a wave of 5, making new all-time highs. Now the common target area for your wave 4 is where we are at the moment, the 0.236 to the 0.5 Fibonacci, 96.7k to 83.6k, with the invalidation being a 77.7k. The bearish scenario on the daily has lower probabilities due to time. So what you see over here is a wave 1, 2, 3, 4, 5 in blue. And you can see that your blue wave 4 here is very short in time compared to your blue wave 2. Now, most commonly, a wave 4 is actually longer in time than a wave 2, or at least quite similar in time. But in this case, this wave 4 is just a little bit longer than 1/3 of the length in time of this wave 2, which in other words is very short, impacts the probabilities. If we then go to the 4-hour time frame, then your most bullish scenario is a finished 3-wave structure to the downside. Now, of course, left, right, center, everywhere on the internet, we had the potential for an ABC count to the downside here. Alternatively, however, you also have my anti-zigzag folder, because I'm actually not too big of a fan of that zigzag as everyone's looking at it, but you can also count it as a WXY, and this structure to the downside does count quite nice as actually a 3-wave structure as well. And then this move to the upside here is counted as a double zigzag WXY. And during one of the live streams recently, I covered this final move to the upside, which does look very 3-wavy instead of a 5-wavy, which therefore would increase the probabilities for this whole structure to be a 3-wave WXY, double zigzag, which then leads you to the scenario you see on the screen instead of that zigzag. But in both of the cases, you have the invalidation at the low, 91.1k, and you are looking for price to create a bounce and move towards the upside minimum, potentially continuing the bigger trend. On the 1-hour time frame, in both of these scenarios, you are looking for this leg to the downside to be an impulse, and this is then how I count this impulse towards the downside. Thanks to this structure that was made last night, I was sitting behind my chart, I was counting the chart, I was looking at the move down, and actually thanks to this structure here to the downside, this whole count basically came to be, because we then have a multi 1, 2, couple of 4, 5s, and then we end with a nice 5-wave impulse to the downside, and we also grab the liquidity below that low and move to the upside right now. Of course, for the bulls are looking for a wave 1, 2 and continuation to the upside. The bears, they're looking for a 3-wave structure. More about that in a second. If you go back to the 4-hour time frame, you always need a bearish scenario as well, right? We can't be biased. We need to look at both of the sides. And the bearish scenario here is a WXY, a double zigzag. So we then have our WX and we look for a wave Y to the downside, still taking out the low at the later stage. And in this particular case, you then have this structure to the downside labeled as a wave A. You look for a 3-wave move up in a B, and then a wave is C to the downside to lower levels. Now, if we look at some of these support and resistance areas, then an important area of resistance, first of all, locally, by the way, is the point of control here at 95k. We're almost there. But then also you have the daily naked point of control at 98.150, right? It's part of this blue box, important resistance, 98k to 98.6k. And then above that, small white box, not too important, but if you do move beyond this blue box, the next one is the white one around 100k. Now to the downside, we have 2 blue boxes here acting as potential support, 89k to 90k, and then you have 86, 87k. Preferably you do not lose that level. Now after your wave Y, you then also look for continuation to the upside, and inside this wave Y, you then look for A, B, C. And inside this wave B, you want to see a 3-wave structure. Now, this is going to be very, very important with regards to the move to the upside and the probabilities of continuation in this trend or not. Because bearish is 3, bullish is 5. That's a very big difference, right, for the probabilities on the higher time frame. So what's happening at the moment is quite important. And for this wave Y, you need to have a three-wave structure to the upside and then move back towards the downside. And on a 15-minute time frame or 1 hour time frame, it would basically look like this. For the bears and of course for the bulls, they want to have another 4, 5, as you would count 1, 2, 3, 4, 5, or potentially 1, 2, and then another 1, 2, right? You don't want to break the structure, basically. That is very important. Now for the bears, in the WXY scenario, you would look for an ABC, so a 5-wave A, hit the point of control, look potentially for a rejection. Quite interesting area, to be honest, for potential rejection. 3-wave structure is important in your B, and then a 5-wave move to the upside in C. Important resistance, 98.1K, that daily naked point of control. And for the bearish scenario, right, because you always need a bearish scenario, because the bullish scenario can be 1, 2, 3, 4, 5, or of course a double 1, 2, while for the bears you count ABC, 5, 3, 5. But if for whatever reason this turns into a 3-wave structure, then a flat ABC, also testing this support here, is on the cards, and that would then be something that I am looking for. Now your higher probability scenario is counting this at the moment as an impulsive structure to the upside, now the 3-wave structure, which would therefore mean the probabilities are higher to see a structure like this for the bears and ABC. For the bulls, an impulsive structure, right? But alternatively, if you hit the invalidation, then a flat, which is this over here, would be on the cards for me. Now locally, if we then zoom in once again, we went all the way from the daily to a 5-minute chart, then what you see here is an impulsive count to the upside. Now it looks a little bit messy. I rarely ever go to the 5-minute time frame, to be honest. But here you can see 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, 4, 5, etc. Right? And then you have the point of control just above us, which could be a very interesting end of this impulsive structure. And then look for a bit of a rejection. We also just missed out on taking this high over here, but the probabilities are high to take out this high because we actually touched the 886 here as well, taken from the, guess what, the high to the low over here, and the 886 sits at 94.9K. We have hit the 886, so probabilities are high to still take out that high. Woo. Okay. Now we go to a little bit of analysis that I did last night. Now, of course, you know, I make a video in the morning, I have a live stream in the afternoon, but it doesn't mean I'm not active. I'm still trading myself, I'm analyzing, and I'm posting all of my thoughts and thinking in silver, right? That's why we got silver. It's the updates in between the content and everything I look for all the time. So I have a folder here which has why a flat has lower probabilities. So why a flat, meaning counting this as an ABC, has lower probabilities than counting this as a wave A or a wave 1. And there's a few reasons. One, if you count this as a flat A, B, C, then your wave B needs to be a zigzag structure in a 5-3, a 5-wave move, right? And that's mainly because this final leg down was quite a clear 5-wave structure, which means this has to be a 5-wave structure, right? Because you need a 3-wave structure in a wave B. We cannot count A, B, C here because then B is a 5-waver, not a 3-waver, which is not allowed. However, if we want to count A, B, C with our wave B here being a 3-wave structure in a 5-3-5, then counting this a 5 is a problem because you can see we have overlap. So we need to think about diagonals. It's not a nice 5-wave impulsive structure. But as a diagonal, this final move down, you would count it as a 1, 2, 3, 4, 5. Your wave 5 is longer than your wave 3, which means expanding diagonal, which is already very rare, never preferred. And your wave 4 here is actually smaller, like shorter in price than your wave 2, which doesn't work because in an expanding diagonal, you actually want 4 to be bigger than your wave 2. So in other words, the probabilities are higher that this is corrective and not an impulsive structure, which therefore creates difficulties for a flat. If you do attempt counting this as an ABC, then besides the fact this looks like a 5-wave structure, we are, well, pretty close to making another high here, which then is another high after the 2-fib time taken from the start to the end of your A and B, because this then would be your A this would be your B, this is your C. And a wave C that is over twice the length of A plus B is not what you want to see. It definitely affects the probabilities negatively. So therefore, this 5-wave structure to the downside last night increased the probabilities that you actually have a finished structure, and then this move to the upside is part of something new, right? A new structure. And if we then look at the silver update section here in Discord, incredibly active yesterday, then I noticed that we at no moment in time actually hit the 382 retracement level taken from the high to whatever low you are taking. So if you take a fib from the high here to this low, it doesn't even really matter. Any of these lows over here, at no moment in time did price retrace to the upside to touch the 0.382. And that is actually very important for probabilities, because if you would be looking for a wave A, B, and then a wave C to the downside, then for a wave B, generally an absolute minimum target is the 382 retracement level, right? Same if you would be looking for a WXY or a wave 1, 2, 3, right? That 382 plays an important role, as generally it is a minimum, as mentioned, retracement level. So in other words, the grind to the downside here, not touching the 382, increased the probabilities that we were here ending a structure to the downside. And that is then also what I eventually, those were my closing thoughts basically. So if I scroll to the upside, type, then over here, closing thoughts, I said, well, in general, after such a long move down, it becomes interesting to look for moves up again. Most of all these counts are either finishing a move or close to finishing a move. The exception is one count where we basically dump in a wave 3 or C, because you always need a bearish scenario, right? But, and there you go, that would mean that a wave 2 or a B finished without touching the 382. So it's not the highest probability. So in other words, the probabilities are higher to look for a bounce to the upside, and especially after this 5-wave move down, we got that opportunity for that particular move to the upside. Now we also have some news today, so make sure you trade safe. 2:30 p.m. Central European Time. High impact news can increase the volatility on the chart. And then if we look at the probabilities, it's actually best to keep it local, I suppose. On the daily time frame, probabilities are higher for the bullish scenario compared to the bearish scenario, which basically means the blue polyline instead of the red polyline, right? And then on the 4-hour time frame, this is what you're looking for, but you can see that it's relatively similar, right? So the 4-hour time frame probabilities are actually not too interesting, as in both the bullish and the bearish scenario, you preferably look for a bit of a bounce. And even in a bearish scenario, you could have a potential flat, which still leads to a bigger bounce in the end. So that's also what I then write here, is looking for a bigger local bounce, eye on the point of control resistance, right? We almost reached it here, 95K. For a potential wave B retracement or 2, right? Depends on what you're looking for, the bullish or the bearish scenario. But in both cases, counting this as a 5-wave structure has higher probabilities than a 3. So in other words, looking for at least a 3-wave structure here locally is definitely interesting, but that point of control can be important resistance for then a potential retracement here before continuation later. So yeah, short-term price action is quite similar between the bullish and the bearish scenario. So that is it. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.